A very good morning from Khandwala Securities Limited and welcome to Monday's trading action at Dalal Street dated March 21st, 2022. As we start a new week of trading, the big question on every investor's mind, can the rally continue in the risk-averse world? Honestly speaking, the positive takeaway from last week's trading was that FIs were net buyers on weekly basis after a long time to the tune of rupees 1686 crores. DIs too were net buyers at rupees 1291 crores. In Thursday's trade, FIs bought shares worth rupees 2,800 crores. Well, our call of the day, which suggests the benchmarks to continue with their upward momentum, as short covering plus value buying likely to be the order of the day, with aggressive targets on Nifty at 17,501 to 17,807 zone. That said, volatility is likely to ride high as Russia-Ukraine war continues to command investors' attention. At the time of recording, the ongoing peace talks between Russia and Ukraine have not yielded any significant progress, raising fears of further sanctions and prolonged disruption to oil supply. A Kremlin spokesperson denied reports of major progress in peace talks over Ukraine, while Putin's speech against traitors and scum at home who helped the West and Biden, calling Putin a war criminal, all added to market jitters about an extended conflict. Also keeping upside cap will be oil prices, which rose on Friday, now back up close to $105 a barrel, with volatility predicted to extend on peace talks between Russia and Ukraine. Now, before we get into details, here is the preferred trade on Nifty and Bank Nifty. Nifty current market price 17,287, buy between 17,000 to 17,150 zone, strict stop at 16,771, target 17,501 and then at 17,807, aggressive targets at 18,157. Bank Nifty current market price 36,429, buy between 35,950 to 36,050 zone, strict stop at 35,201, targets 36,751 and then at 37,055, aggressive targets at 38,721. Outlook for Monday, bargain hunting likely to be the preferred theme. All eyes will also be on Fed officials who will make an appearance, including Fed Chair Jerome Powell on both Monday and Wednesday, with traders looking for any clues on whether the central bank will deliver a 50 basis point rate hike in May and what plans it might have for running down its $8.9 trillion balance sheet. Now, here are other key things and themes we need to know before market opens. This morning, early indication at SGX Nifty is indicating a gap up start for our stock markets. The strong expected positive open is on backdrop of a strong close at Wall Street in Friday's trade, where the Dow Jones, the Nasdaq and S&P 500 enjoyed weekly gains of 5.5%, 8.2% and 6.2% respectively. Our chart of the day is bullish on Vedanta, National Aluminium, Reliance, SRF, Trend and Tata Steel with an inter-month perspective. The one stock to buy right now, buy Reliance Industries at current market price and or dips between 2200 to 2250 zone, targets 2751 and then at 2863 mark and then aggressive targets at psychological 3000 with stop below 2147, holding period 9 to 12 months. Technically speaking, Nifty's biggest supports are placed at 17,127 and then at 16,827 mark. Only below Nifty 16,827, expect waterfall of selling. From a chartist standpoint, the technical landscape will improve considerably only if Nifty closes above its biggest hurdles at 17,807 mark. The Nifty options data for March series suggests Nifty is likely to be in a trading range of 16,500 to 17,500 zone. Maximum call open interest is at 17,300 followed by 17,500 strike price. So the 17,500 mark will be Nifty's crucial resistance zone. Maximum put open interest stands at 17,200 followed by 17,600 levels. Call writing was seen at 17,300 and then at 17,500 strike price, while there was meaningful put writing at 17,200 and then at 17,100 strike price. Bank Nifty's maximum call open interest at 40,000 strike price, while maximum put open interest at 36,000 strike price. That's all we have for now. For any queries, do contact us at 022 4076 7373 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Khandwala Securities Limited or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.